Good evening, TheoTrade. This is Corey Rosenblum bringing you the nightly video for July 3rd before the 4th of July holiday 2018. We're talking about range, go away, or I guess in this context, range, breakaway. We're still in the same spot. I'll zoom us in. This is the S&P futures on the daily chart. So where we had in May into June, really this 40-point range, and it was volatile. There were multiple gaps, but the main play was to go up against the high and down against the low. That's considered fade trade tactics until we got a breakout. And that breakout occurred at the start of June, and that pushed us up away from 2740 toward our higher frame target at 2800. From there, the price returned back toward 2745 and recently has re-entered the sideways trading range. I think that's best seen on the hourly price chart. We can even do a 30-minute price chart. I think the main idea going into this remainder of the holiday week, into the week ahead, is just this concept of 2740 and then 2700 and playing what I like to call ping pong or back and forth, short the high, buy the low. If you're an intraday trader looking at these spots, so 2735, 2740, 2745 as potential spots to take off positions and to go short into resistance for a swing down toward the midpoint. That's about 2720 and ultimately the prior low at 2700. That was the case almost for the whole month of May. And I hope that's not the case necessarily for the July and late June into July. But we're going to wait for this situation to change. And this range go away will break with a future range expansion or volatility event, just like we had in June. It could break to the upside. If so, we have a future 50-point price pathway back to 2800. But if that fails, we do have a lot of support from trend lines. 2680 is the prior spike reversal low. We'll call that a failed breakdown or a bear trap. And I think importantly for us, the 200-day simple moving average. Price has threatened to break beneath it, but really hasn't done so. It's been a spot for support. So that's what we're looking for as we begin July and go through the remainder of the holiday week. Nasdaq is a little bit different because it's at a stronger position. It is closer to the highs. Compare the S&P, which is down away from 2860, 2870. The Nasdaq, a little bit closer. Not quite in the same trading range. We can see how the May period took place, breakout, and now it's the June into July trading range. Simple numbers, 100 points. Nasdaq did that today and yesterday, 7,000 to 7,100. We can also see it on the 30-minute chart. Same thing. Now, it's not quite perfectly 7,100. It's roughly 7,120 in this spot. Don't look at these as absolute magnets, absolute spots that if it doesn't touch it exactly, it doesn't count. Think of these as range spots. So 7,110, 7,130. That's a resistance or short candidacy, and down to about 7,000. That's a long or a bull or bounce candidacy. And in this scenario, we're still looking to play within this, but we will be expecting some type of future breakout. Nasdaq downside break takes us back inside this May trading range, and that's going to be roughly 6,900. Notice that the Nasdaq is well above its 200-day simple moving average, and that again is a little bit different than the S&P. But notice how the 200 simple, it's the red line, is a target, almost a magnet, and a spot the market gravitates toward, even in uptrends, or especially in uptrends. And again, compare the S&P, which is not that far away from its pivot. The Dow, strangely enough, is at the moment beneath its 200-day simple moving average and is beneath where the same relative spot is on the S&P. So we'd call that relative weakness in the Dow. And that's been really the case for the majority of 2018. Its pivot spot, if we zoom in, it's a little bit different. We have sort of a triangle or a consolidating falling resistance line. It again is roughly 24,000 and 24,400. Today's session, the holiday session, the half-day session, had a resistance or rejection down against this well-known pivot. So that's what set in motion today's down day. Other perspective in terms of the range would be the volume profile levels. You don't have to necessarily look at these, but what we're seeing is a confirmation. Again, 2740, 2700. 2700 happens to be the value area extreme. And 2725, not quite 2720, 2725 is the point of control. Again, I'd recommend looking at this as a spot marker level or high volume node, and price typically does this, which is contract back and forth. Resist against the high, buy or support against the low. And this sets your game plan in motion. Again, if you're short-term trading into this spot marker zone, just beneath the open air pocket, which is here, that could be a bear candidacy. Again, that set the stage for today. Future plays off of 2700, Thursday potentially, or futures on Wednesday. Let's see what happens next. Again, the play is for a range to continue until we get the future breakout. And the Nasdaq, its point of control is 7,100, kind of a perfect little level there. And the upper value, 7,200. Lower value area, it's not quite 7,000, but it's just beneath it. I would reference these trend lines. These are helpful, but trend lines are pure price, and those can help your decisions. Don't forget, draw the midpoint magnet, and that midpoint magnet would be roughly 70.50. So use these as your spots markers, play against them into the resistance. Try, as we go forward, to play long or bullish on an intraday basis off a future support bounce from 7,000. But don't forget, ranges don't last forever. We'll eventually get a breakout. But until that happens, all we can do is ask for the range to break away. Have a great holiday, TheoTrade. This is Corey Rosenblum bringing you the Theo Nightly Video for July 3rd, 2018.